Okay, folks, good morning and welcome to Swing Trading today. I'm sorry about the delay. We had a huge storm here on Long Island last night, and the electric in my master bedroom was out all night. And then I came to realize that it was just that room and not the entire house that was completely down. So I had to flip the switch on the electrical panel, and that's why I'm able to get on right now. But I apologize for being late. I thought I had no electricity, and we're gonna get to it. Good morning. Who changed their name? I read that comment. I laughed my you know what off. Like the smash button. Change my username. Respect for Bob. That's the best. Good morning, Franklin. Nah, you know what? It's a very, very good point, Franklin. But you know what? I don't think it would have helped me because it was the one fuse that remained down. So in the end, it was a fuse issue on the electrical panel. But you're right. I do need to get a generator. Okay, let's let's take a look at MSFT and Tesla, which reported earnings. Not the best of reactions on Microsoft share price. Now, this is the largest component in the Nasdaq 100, the triple Q names. So, if you ever wonder, and if my microphone is bad, let me know and I can make an adjustment. If you ever wonder whether or not this market is manipulated, you have the largest component on the Nasdaq 100 down and down significantly, a few points. Yet the Nasdaq 100 at last look, shrugging it off. It's up 1%. No, don't worry. Don't worry about it. We're all good here. Don't worry about Microsoft. And the freaky part is that Microsoft, unless I missed something, I think there was an expense issue. But otherwise, they had a pretty good quarter. So maybe it was just some profit taking on the news. So Microsoft a little bit weak today. I would just keep an eye on a possible fade of the Nasdaq 100. Tesla. Shorts getting killed again on Tesla. So apparently the street liked what they had to say. And what we're going to do tonight, folks, we're going to go over these charts because it doesn't matter what they're doing right now. What matters is how they close out the day. So tonight we're going to be getting together as we always do on Thursday nights. Can you believe it's another Thursday night? Thursday Night Futures Live, 6 p.m. Eastern Standard Time. There's a link below if you want to enter your email address to get an alert 15 minutes or a half hour prior. We hate spam too. So Tesla, I mean, if it holds where it's trading right now, this is a significant breakout, and this stock has more legs. I mean, we broke out here. This last 4-hour bar, pulling back now, retesting. All you need to do is get a follow through, and the shorts who didn't cover, they will be covering in a very big way. And there we go. We're starting to break through now. So very good price action on Tesla. There you have it. There's your wedge formation. in the process of possibly breaking out. We'll know how it does by 4 p.m. Eastern Time today. Good morning, Tommy. Oh, you're killing me. Your microphone is fine. You sound like an angel. I needed a laugh. Thank you for that. All right, let's check out the futures. Let's begin. I just want to check out the dollar. The dollar is really coming under a lot of pressure. As you know, this was expected, right? It was only a matter of time before this happened. It was a correction of our own making, meaning the U.S. government. And we are weak and getting weaker. What is that doing? It's fueling the rally in the gold miners. Gold, the miners we are long of. I will say this, we did scale out a little bit of our gold mining trade. We're beginning to book some profits here. And we did sell our silver position because that is completely gone parabolic. Now, gold this morning up nearly another percentage point. And it looks as though we are going higher. But keep in mind, we're a bit extended here on RSI. You know, I think that this is a good environment that if you're long of a JNUG or a GDXJ or a GDX, and you wanted at this point to sell some out-of-the-money contracts, covered call contracts, I think this is a really good environment. Same deal holds true for silver, because we're going to get a pullback. If you don't want to get taken out of your position, you know, just go out-of-the-money, covered calls, bring in some premium, hedge your position. And the time to sell those calls is on strength. That's when the implied volatility is fat. Where's my silver? Silver is just insane. That being said, it'll probably move up higher before all is said and done. But we did close out yesterday above the third standard deviation Bollinger Band, and I do mean well above. So at some point in time, we're going to rally and we're going to get a reversal. But given the way the U.S. dollar is looking at current and the fact that the 20-year bond broke out yesterday above daily resistance, it may not be today. It could be tomorrow. It could be next week. But it will happen. Speaking of bonds, this 10-year bond has just been in a tight, orderly consolidation since, I mean, really, March. Look at this inverted head and shoulder setup. Left shoulder, head, right shoulder. Man, if this thing breaks out, you'll probably see, well, in real terms, yields are already, for the most part, negative. But if this thing breaks out, wow. So we're watching this, but yesterday, let's bring up a chart of the TLT. Yesterday, the TLT there's the IWM. There's a two. You know what? Let me bring up the tips really quick. See this? You know, granted, very, very powerful chart, but you're beginning to see signs of a potential fade. You know, last time you saw something like this at the top of a trading range was back here. And prior to that, back here. And subsequent, you saw a sell-off. So this is what I mean. The market is sending us a signal that, beware of this inflation trade short term only. Longer term, it's game on. But short term, beware, because it can reverse. Now, and correct, not reverse and go the opposite direction. It'll pull back, and then I'm sure it will resume. All right, iShares. Why is this not coming up for me today? I want to go to my annotated view. What happened to it? All right, let me just do this. We'll just do this. All right, so the same as what you saw on the tips, more filled candlesticks, a sign of indecision. The big however here is that we've been waiting for the TLT to break out for literally months. And it did so yesterday. Not the strongest of breakouts, but it's a breakout nonetheless. And when I say not the strongest of breakouts, we did fade on the day, and volume was light. So a little bit of suspicious price action, but net, odds still favor bulls. It did, huh? Let's go back to silver. Yeah, it looks like it wants to continue higher. You could say that this is a divergence, but not really, because we're just consolidating here. It's going to go. It wants to go. It's an animal. 15-minute chart. Absolute animal. So again, on this rally, I mean, let's bring up a chart of silver to illustrate what I'm talking about here in terms of it being very, very extended. And don't get me wrong, I love silver, love it. But we have RSI 85.32, and here we are trading above the third standard deviation Bollinger Band. And history has shown us that typically, like back here, it doesn't end well. But look at this volume. I mean, this is the highest volume bar. I don't know. It's got to be a couple of years. It's going to look a bit noisy on a daily basis. By far, the biggest volume bar in years. The question I have is that when you see a volume bar like this, and you have silver this far extended already, is that a blow off top? Short term. I keep wanting to repeat that. Short term. I don't want people to take my comments out of context. I mean, we're going back 7 years now. Let's go back to include the blow off top back in 11. Yesterday was the biggest volume bar. To the upside anyway, going back to, Jesus Christ, 2011. So, warning flag on the track here. Okay. Yeah, Tommy, it is, and it's a great place to start scaling out, especially on a spike today. I'm not sure, they probably do sell options on the SLV or the AGQ. You know, it's a great time to sell premium. USLV no longer trades, which pisses me off. However, it does still trade on the pink sheets. I loved this ETF. I can't believe they killed it. Horrible volume now. Nobody even knows it's out there. This was a great ETF. All right, let's move on. Let's take some. Well, first let's go to the indexes, see what they're doing. See if there's any change here. No, NASDAQ continues to gain steam. The NASDAQ 100, that is. The one chart that looks really, really good, I forgot to go over this. Palladium. This is on our watch list. Looking for a breakout here on Palladium as soon as today. And I want to know when we have a new daily high. Okay. So I believe the ETF symbol for Palladium is PALL. Yep. Yeah, we're going to go here. I think the play is that if we spike up today, we got to book profits pretty quickly. At least that's my rule. Everybody's got their own thing. But we're going to be trading right up and into the third standard deviation Bollinger Band. Really good volume. This is what you always want to see. This is volume that's rising sequentially. We've cleared resistance. We retested yesterday. I think that we're going up to at or about the let's just round it to 216. Good looking chart. Let's take a look at it from a higher level view. Weekly chart. I mean, what can you say? Beautiful. Very, very nice. Well, Tommy, your point about the Golden Cross, I'm assuming that you're referencing the 50 period rising above the 200 period moving average. The beautiful part about that is that what was, just to Tommy's point, and to illustrate how that's so important, is that, you know, historically, since 2011, or whenever that the negative divergence was of the 50-day crossing down below the 200-day moving average, that both moving averages acted as a declining ceiling. And the beautiful part now is that that's all in the rearview mirror, in that now they are acting, at least in the case of the 50 period and soon to be the 200 period moving average, they will now act as the rising floor of support. That's the beautiful part. Actually, this is a weekly chart. Let me go to a daily chart. But the weekly chart holds true as well. Daily chart. So what I'd be looking for on this pullback is quite possibly the first retest of the 50-period moving average, which by the time we pull back is going to be considerably higher. A pullback and a retest of the rising 50-period moving average. And that'll be the first retest in a long time, which has been successful anyway. Let's take a look at the S&P 500. I actually have the Russell in front of me. Let's bring that up first. We booked profits on the Russell. I'll probably come to regret that now. Up about a little over a third of a percentage point. I don't like the small caps in this part of the business cycle. Where's the S&P? Here we go. S&P looking very, very strong this morning. Just want to take a look at bond yields again. They're still up. I mean, the bond price, which is still up. I will warn, this is the Ultra 10-year. We're flirting on a 4-hour basis with the lower band of support. Note how, at current, we're trading down below the lower band of support. Now we're back above it. And the reason why this is important is that if you're looking for a catalyst of as to why you may get a pullback on silver, the precious metal names, utilities and whatnot, it's because if you see not so much a rally in the dollar, but more so a rally in yields. And if we break the lower band of support here, then you might get a rally in yields, and that will snuff out in the short term anyway the rally in gold and silver. But I don't think that rally is going to last all that long. Let's take some chart requests. I haven't checked out what members requested yet. Bear with me 1 second, folks. All right, BCO. Only have one? Okay, BCO. Brinks Company. Interesting. Okay, Brinks. Monthly chart. Pretty weak here. Clear and defined downtrend. We've made a new lower low month over month. Support at 33.66. Stokes is still weak. RSI, potential for a double bottom setup here or a continuation move lower. The jury's out. You know, this is one of those where you don't want to hope when you should fear. You can look at an indicator and say, wow, that's definitely going to set up. You know, take your crayon out and go like this. And believe me, I've done it. And you take your crayon out, you talk yourself into, wrong. There we go. You talk yourself into a higher low. You're not paying attention as you should to the price action, and you get very, very disappointed when you see a failure of this double bottom setup, which you should have realized in the beginning. Be very, very careful of putting your nickel down based upon a potential setup. So the probability here, and that's what we deal in, is probabilities, is that from a monthly view, and maybe I'll get swayed from a weekly and a daily basis, is that we're going to see lower lows on Brinks. Weekly chart. You can see that there's a thought process by the market to try to get let's do this. That's better. To try to put together a rally to try to break out Brinks above this upper band of resistance on a weekly basis. But each time has failed. And you can see the same reflected on RSI. But there's no positive divergence here. No breakout. We're still getting lower highs and lower lows. Daily chart. Now, on a daily basis, we had a bullish reversal bar yesterday, but one day does not make a trend. You know, all too often, and again, I'm guilty of this, you know, many times in the past. You know, you have a stock that's in a downtrend, you have a bullish reversal bar on a daily basis, but you have a longer term downtrend going on. You put your nickel down and you bet on a rally and you only see it fail because the trend, we're forgetting about the trend. Whereas if you saw this on a chart where you're in an uptrend on a monthly and a weekly basis, well then you should be putting your nickel down because in all probability you're going to get a follow through rally. But why? It's because you have the trend, which is your friend. But right now we don't have that on a longer term basis. So long story short, I like yesterday's price action. I don't like the resistance above. I don't like the weekly trend. I don't like the monthly trend. So I would wait until we got a breakout above this upper band of resistance. And that's at around $39, $40 per share. Where did we close out yesterday? So it's not that far away. I want to check out the raindrop charts. And for those not familiar with raindrop charts, it's a mixture of candlestick charting and VWAP, and it gives you an indication of how the buying was. Was it healthy buying? Was it bearish buying into the close? And it was okay buying. What you wanted to see, like on the left side of the candlestick, is the morning price action relative to volume, and the right side is the afternoon price action. And you wanted to see a big fat belly at the top of that raindrop chart. And you have a belly, but not a big fat one. So it's okay. These purple candlesticks tell you when there's indecision and a probability of a pullback. So it's a good indication of when you could re-enter the short side. And this is exclusive to Trend Spider. There's a link below, 35% off, lowest on the web, if you're interested. So BCO, you'll probably get a rally with the market today, but you have a lot of resistance above. I would wait for a closure above those resistance levels. Any other symbols? MGM, MTH? Meritage. The exact opposite of what we're seeing on Brinks is this company, where you have the trend, which is at your back. Everything's going in the right direction. You could argue that we're a bit extended here. Weekly chart. But I'll tell you, let's overlay monthly resistance. Just keep an eye. You don't want to see a fade in the closure on the month down below this resistance level at 83. $85.65. If we close above it in the month of August, a great entry point would be a retest of that support level. And I could see the shares moving up to easily $100. Daily chart. You got it, Franklin. Daily chart, very, very nice. We broke out above that monthly resistance level yesterday. You know, might they pull back and retest as soon as, you know, today, early next week? Sure, but I think that they're going to move up higher. It's a really good-looking chart. So, MTH looking good. Now, MGM, I was looking actually at Penn National Gaming yesterday, and that looked good. All right, so MGM obviously still in a downtrend. Now, there's a couple of ways to look at this. You could be very, very broad-ranging and say, all right, here's your triangle formation, there's your line in the sand, or you could take a look at it another way, that what we're doing here for the past 3 months is putting in a floor at 1539. And that is your logical stop point. Where do we close out the day yesterday? 1633. Not loving the Stokes, not loving RSI, possible higher lows here. Lots of topping action. Stiff resistance is going to be up here at a 23 handle. It was support back here in June. Prior to that, in June of 19, I should say. Prior to that, January of 19. Weekly chart. The weekly chart looks a lot more constructive than the monthly chart. And for the monthly chart to get better, of course, you need your weekly chart to firm up first. Now, what we did here is that after the sell-off, which ended on the week of June the 22nd, we consolidated, then broke out the week of July the 13th. Now we're doing a retest. I would be interested here in knowing the short interest. Do we have a potential for a short squeeze? A multi-day short squeeze? I would also want to know when earnings are, because I wouldn't want to hold it into earnings. You know, MGM's looking interesting. No early warning signals of RSI breaking out in advance of price. It's just validating the price action. But I do like the fact we're holding support here. Daily chart. Now we have broken out on RSI. We're pulling back, retesting now. Yesterday was a bearish reversal day. I think what you need to do is say, okay, if we fail to hold 1610, in all probability, we're coming back down here to retest 1545, give or take a penny. But if we hold 1610 and reverse off of it, that might be a good entry point. And I would also be looking for these Stokes to hook back up. So I'm not overly bullish on the shares. I could see a trade here. But I would really want to know how many days do we have of a short squeeze? And that would dictate whether or not I want to be involved. If there's not a huge potential for a short squeeze here, then I need a catalyst to be involved with a name that's in a downtrend when the rest of the market's in an uptrend. Unless, of course, you like the stock, the evaluations, which I have no idea about, and I'll plead ignorance on that. And you're looking to buy it as an investor, which is fine. I would just nibble and add on strength as an investor. Let's go to OPK. What's up, 7 post-market? RL? Oh, Meritage? Yeah, Franklin, you've liked this stock for a while now, and it's an absolute monster. Monthly chart was still extended relative to the third standard deviation Bollinger Band. I still have an alert set here. I mean, there's nothing not to like, but the only concern I have is where we're trading relative to the 3D Bollinger Band. And you can see on a weekly basis, you know, it's correcting off of that level now. So the trend is obviously still up, but you're seeing some selling pressure move in here. Gotcha, RL. Daily chart. And again, it's struggling with the 3D Bollinger Bands, and it's pulled back off of those gap ups on a daily and weekly basis, but not the monthly basis yet. But that could still go on a bit longer. So one of two things could happen here, or both. We fill this gap at 5.09, and we bounce off of it, or we simply, because the market's going parabolic now, we're simply going to take this as a rest day and say, okay, it pulled back, and now it's time to rip it back up again. I could see both happening, either one of the two happening, I should say. In this market environment, it's absolutely insane. We're approaching We're approaching levels, and many of you out there are probably too young to remember, but the dot-com bubble, although valuations are not as stretched as they were back then, I'm getting that feeling. Now, you can see on a 4-hour chart, in fact, that support level I drew on a daily basis, we bounced off of it the back half of the day yesterday, and we went green. So that leads me to believe that my latter scenario of this holding and a continuation move occurring along with the rest of the market is the most likely outcome here. So short-term bullish, but going back to that monthly chart, just be wary. We are very, very, very extended relative to the 3D Bollinger Band, but it can move up higher. And with that, folks, I'm going to say everybody have a profitable trading day, and I will talk to you soon. Be well.